Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFile. I'm your co-host Joel Elconin, along with Dennis Dick, and we have Serge Berger on the line. He is the author of The Steady Trader. How you doing this morning, Serge?
Good morning, guys. Good to be on.
Yeah, now, man, I wish I could have had you on Monday because you'd stuck your neck out last week and you publicly shorted Apple. I think besides me, you're about the only person that does that. And first of all, tell us why, what was your criteria to get into the trade?
Well, congratulations to you too if you took the trade,
Nope.
Joel. But basically just a confluence of things. First we can talk about it sort of more from a structural perspective. I think when the earnings came out and iPhone sales disappointed, that's a fairly important thing to miss on, at least from a rate of change perspective, because obviously that's the big one, right? So, and then of course, quickly you move into the technicals and you see a stock that just really couldn't get past that 132-ish area, 132.33, whatever, gapped down after earnings, and it was a one-way street ever since. And then, you sort of take a multi time frame approach, and we saw, basically the trend break on a multi-year perspective. Then we saw the 200-day break, which to me was more of an inevitable. I shorted before the 200-day broke, but we came into this lateral support as well. So just a confluence of things coming together, and an understanding that if the broader market is going to at some point give us some weakness in the next month or two or three, then Apple is most likely going to have to follow suit at some point.
Yeah, you did it ahead of the when it breaching the 200-day moving average. So definitely good timing on that because once you get the momentum through that level, it continued. Now you picked your stop. I think I saw your stop was above 125, or I believe in the 125 area. Was that based on the post earnings pop high? I believe that came in at 125 change, or did you have another reason for using that as a stop?
I was to some extent a percentage stop. I also measured it from the post earnings drop. I don't want it to give up a whole much more than 38, 40%, of the initial 2 day swing lower, or whatever that were. Actually, it was just 1 day swing lower. So it was more of a percentage, uh, you know, of the move. And then of course that also coincided roughly with the 50 and 100-day moving averages. Um, you know, just hope again a multitude of things coming together at that resistance area.
And how did you choose your target? I believe your target was 110.
Was 110. We closed it yesterday at. I'll give you the levels in 1 second. I have to pull it up. But basically, it was 110 based on very simply what I thought was more or less the middle of a support range, which I view as between 106 and about 114, 15 ish. So that was roughly the middle of that. The rate of change is what ultimately made me take profits yesterday. It just dropped quicker than I anticipated, which is good, right? So we exited at 113.72 is the timestamp I have here on the Steady Trader product.
Oh,
So that's what
okay.
we
So
did.
you're out then. You're
Closed yesterday, yeah, and I'm happy to go short again, but I just think it dropped so quickly. We made 6.7% in a matter of a few days. I'm pretty happy with that. And I think the broader market this morning futures are up 85 basis points here. Probably was a decent move to take some profits.
Yeah, except that Bank of America downgrade here. It has it traded down another stick here to buck 04. So really, really interesting market here. But the biggest component actually, I see the top component in the index trading in the red by buck 4, and I see Pfizer down a little bit. But of course, that's going ex dividend. Uh,
Serge, I just want to jump in here for a second too, just to expand on that point, because I was even saying on the show, if Apple starts to cave, I think the entire market will start to cave, and I've been wrong so far on that call because this market here continues to find rotation to keep us alive. When and that's the one thing here. I'm just looking here, and a lot of people are getting nervous, and they're talking about Apple correction. They're talking about all this overall market's eventually going to correct. Do you think this market just goes higher because everybody's too dang bearish?
I think so. I think again, we have to look at it in different time frames, but I think for the immediate term of the next couple of weeks or so, into mid to late August, I think unless we get some sort of flush on Friday after the July jobs report. I think we're probably going to float higher into the end of the month because I look at a lot of sentiment stuff, and honestly, guys, it is so damn neutral to potentially bearish. So basically, people aren't bullish, right? And that's a problem. People are. I see it with my subscriber base. I see it on Twitter. I see it at the hedge funds and other guys I talk to every single day. People just aren't really bullish, and it's really hard to see the market drop when that's the case.
Especially, I mean, you look at the top component like that going down 18 points. I mean, good thing, if you're not, just keying on the Apple and as your trades in the index, you're going to just get absolutely slaughtered here. But we'll see. It's early in the day, trading up 17 points. We'll see if it can hold those gains. Just want to go. We skipped over a stock in the chat, Starbucks, and I know that got some good ink and barons over the weekend. Basically, what I saw in Starbucks is that 20% of their business is done on mobile payments. So they're avoiding some of the fees, the Visa and Mastercard and whatnot, and they expect that to continue. What's your outlook? You have any opinion on Starbucks?
Yeah, so I mean, for one full disclosure, I am short some out of the money call spreads. I think October paper on this stock. I forget. I think it's 60, 62 strikes or something like that, or 65 strikes. So I expect this stock to not be able to sustain this momentum, and that's more the price action. More to your point, though, I think that is exactly what's driving the stock right now, at least from a news perspective. And I had this call yesterday with a big hedge fund. In London as well, we talked about this, and we said basically it's a good story. It's very much like Facebook. There's a believable growth story. People are clinging on to it because the market hasn't done anything, so they have to chase things higher that are continue to chase higher. Look at Netflix yesterday, which, from what I'm hearing, is someone getting squeezed in that stock. But it's the same story. It's believable growth stories, late cyclical bull market, large cap tech-ish type of stuff. Starbucks, the more I hear about this payment system, the more I look at it as a technology company. So I think that's exactly the thing. People are forced to chase these things higher that continue to rise.
And it hit its all-time high on earnings day. That was 59.31. That's really the only relevant level to keep an eye on. We did have an all-time closing high here at 58.70 and continuing. So, I mean, there's your all-time high. I guess you did like to see it if you're a bull here at Starbucks, get it to get over and clear the $60 level. Serge, I'm going to throw this other question to you and Dennis. I'd like you to weigh in on this too. I mean, with the Apple Pay and Starbucks and these places going to their own apps for mobile payments and stuff. I mean, could this have a long-term negative effect for Visa and or Mastercard?
I think more and more so at some point. I unfortunately have enough insight into the actual dynamics of that payment systems business, but there's other payment systems, companies out there that have been stealing a lot of business from this stuff. I mean, even PayPal, which I know is not its own standing company, but so I think at some point, I don't know exactly where that turning point is, where it becomes a meaningful thing, but it's, to me, I look at it a little bit similar to like the NFL starting its own TV network, right? Like where they really start broadcasting all the games, and I know they're doing it for a while. It's the same thing with this, like or like the Apple story where they the other day they said they want to buy their own, what was it? Their own like cellular thing. It's. I think that's the story, is that these big companies can start to do some of the stuff on their own because of technology to a large extent.
Dennis, any thoughts on that?
It's a cashless society we're turning into here, though. So I think the overall growth here, as cash becomes a thing of the past, it seems like, is still to obviously these payment systems. So I think I still like them all. I mean, Mastercard, Visa. When you start looking, there's still a lot of people that use cash out there. But as the younger people start to dominate, and start to actually, you think about all the technology, you think about all the young kids here nowadays that are buying everything online and buying, and you need PayPal, you need a Mastercard, you need a Visa to do that. And as we become more, and as those younger kids get more money, get real jobs, it is going to be eventually become a cashless society here. So I still think the overall growth in the overall industry is big enough that all of those players can actually continue to improve and continue to make more money because the overall growth in that industry is just enormous.
But when they like on these Starbucks apps and things of that nature, right? They are bypassing the fees from Visa and
Yeah.
Mastercard, right? So
Sure.
Yeah, well, I
okay.
mean, PayPal, the same thing too. I mean, you used to have to use your MasterCard or Visa. Now you can use, PayPal account too. So it is different, but at the same time, there's still a lot of growth overall there to be had still.
All right, Serge, let's switch gears here into the banking sector. September, how are they going to raise rates in September, December, or ever? The financials, have showed some weakness over the last couple of weeks. They've battled back with the general market. Let's talk about the financials and some of the big banks and what your outlook for them is.
I've been saying this for the past couple of quarters, and I really like the banks through at this from here on forward through a 6 to 12 month lens, especially Citigroup and Bank of America, and they have helped hold the market up. On my base case is with a flattening yield curve of late again, that we're gonna see these things, the large banks start to weigh on the market a little bit, or at least not help the market. And so I'm actually more of a seller of this space for the next couple of months, as opposed to a buyer, because of that dynamic. And I just don't really. I think people are still way too hawkish as far as the Fed is concerned, and that's going to probably impact these stocks.
Yeah, so you think
So
they've. Go ahead, Dennis.
I was gonna change the subject, so just continue your point.
So they've had a run up in anticipation of interest rates going up, but then when
hmm
they don't, you're looking for them to take a little bit of a haircut.
Yeah, it's more of a breather. I mean, if you look at something like Bank of America, I see no reason why that can't get back to the 1650 area, middle of the 12, 18 month trading range, and ultimately then go higher again. It's just, I think they've gotten a little bit ahead of themselves, as well as just the general hawkish outlook out there.
So Serge, I've got about a minute left here. What stocks are on your radar for today?
Microsoft is what I'm looking at. I think Microsoft. I think the whole tech space. After it bubbled higher there from the Netflix and those kind of and Google earnings, I think taking a bit of a breather. I like Microsoft here back to the $50 area. I'm also considering Coach, and there's at least a couple of financial editors out there that are laughing if they're listening right now, because I love that stock from a trading perspective, and I've loved it short for some time. And I think after yesterday's earnings, there looked to me like there was a decent sort of blow lower the day prior, and then a bit of a
Yeah.
up gap yesterday. So to me, this is really technical. I mean, I could see this stock move into the 33, 34-ish area as a relief bounce.
Okay, just real quick before we let you go here, any takes on the crude oil market?
I continue to not be constructive. I think in the near term we could see a bounce. A lot of it again is based on the dollar and even the Fed at some point, and it's a supply demand issue as well. But I'm much more constructive on crude here. Once we get more volatile equity market, I would suspect that we see a much better bottoming phase happening at some point this autumn or so, before we could start a meaningful move higher. So in the near term, and I've been saying this for the past few months on the show, I just, to me, it's really difficult to measure this at this point. It's just a one-way street, and aside from a bounce, I'd rather just wait it out a little bit longer.
Yeah, one final issue for you. I know we've talked a couple times about Walmart here, and it's come down. I mean, I know Dennis was trying to pick it up and closer to 70 here. What do you make of this consolidation here in Walmart?
Yeah, and we've talked about it. And I've been wanting to buy it, particularly there in the early July, late June period. I just haven't been able to really get interested in it. Maybe it's making a better low here. Technically, I think this thing is trying, because so when it comes to moving averages, I think we have to be careful, in terms of using it more as a religion than anything else. But I would use these things with as reference points. So the 50-day moving average for Walmart needs to be overcome, and I think it's an oversimplistic, linear approach to look at. But I think at this point, a lot of people are looking at that. It's the discussion I had back in June and early July with some guys, and I think that needs to overcome. It hasn't been able to do that. Push above 73-ish, on a daily closing basis would probably help.
Okay, we've been on the line with Serge Berger of the Steady Trader. You can find his product on marketfi.com. Serge, thanks for the change up this week, and we'll talk to you again soon.
Awesome. Thanks, guys. Have a good week.